In this video, we are discussing what is going to happen when there is a recession. It's an educational video where I'm going to be explaining data and what is likely going to occur for Bitcoin and why I think that being invested into hard assets like commodities, cash, and crypto is a must to do at this point by looking at the data. My question to you is, before we continue, where do you think Bitcoin is going to peak out and when will that be taking place? Leave it behind in the comments beneath. Now let's get started with this educational video. As you know, I'm quite conservative, which means that I think that the upcoming recession is likely going to be disastrous, in which you can already see that the world is changing in a negative way. Populists are getting the power in countries. Anger between people or groups in society is getting worse. The gap between rich and poor is increasing. So you can feel the tension across the globe. And that's why I think that this topic is so important to understand, to position yourself well, through which you can stay away from all the troubles that are taking place and you can stay focused on the real picture. So we want to share some more knowledge behind our thesis of what we are likely going to be expecting. And this is basically the first educational video where we want to make more content on UBI or what the politics are doing or the impact of a crisis, real estate markets. It's all going to be there, but this is the first one and it's going to be about global liquidity in the world. And I think that this is by far the most important topic to understand, because understanding liquidity means understanding the price action of Bitcoin. I think there are two scenarios when it comes to the price action of Bitcoin. The first one is it's correlated to the halving and the impact of the halving. You can also say it's correlated to elections, because after elections Bitcoin's price go up, or it is correlated towards the liquidity in the world. And we know that in the past 2 years, the overall liquidity has been stagnating. The US has actually been going down, which means that doesn't have a positive impact on the price action of Bitcoin. Currently, we see that China is increasing liquidity because they come out of a very terrible period for the economy. Treasury buybacks from the Fed is taking place. And in general, the amount of debt that the US has is astronomically high, which means that they need to do rate cuts and also need to continue doing QE, because the inflation will likely continue to pick up momentum as they have been increasing their liquidity. You need to realize that increasing liquidity almost always equates increase in inflation. If you don't expand that, then the inflation will also not be expanding at all. So when we look at price action, you want to look at valuations against the M2. So for instance, as you can see, you want to see the price correlation between gold valued in the US dollar and the M2 supply of the US dollar. First, before we continue, we like to explain what M2 actually means. And there are several versions of the overall supply of money in the world. You've got M1, M2, and M3. M1 is cash, checking, and saving accounts deposits. So that's the smallest version of the money supply. M2 is cash, checking deposits, saving accounts deposits, and other deposits readily convertible to cash. So anything related to it. That's basically the trick, because M2 is very easy to manipulate. You can do any sorts of treasury bonds and then it will be valued at the M2 supply, which technically is not really adding cash to the markets. M3 is everything of what we just discussed, including large institutional cash deposits. So theoretically, you could say that if the amount of money is being increased, then other assets that are scarce are likely not going to drop in terms of price value. So in that case, it's also true that valuing an asset against the US dollar doesn't really make any sense. And I often say, if at this point one bread costs $1 and one Bitcoin is valued 100K, then if that bread is going to cost $10 in a year from now and Bitcoin is worth $1 million, then there is nothing won by the increase of price for Bitcoin. It's all about purchasing power. So you need to look at different charts, and in this case, you need to look at the M2, for instance. It's also true that if you have the equation of Bitcoin against the US dollar, that Bitcoin doesn't have a substantial increase in amount of Bitcoin that will be released or available on the markets. But the US dollar is quickly moving around. So if the amount of USD is going to be increased, then it's very likely that the scarce asset is going to be valued higher because there's simply less of those. It's a very standard way of interpreting the charts, through which if you look at the chart of gold and you look at gold versus the M2 supply, you can see that gold has been doing great in terms of expanding of the monetary supply, which means that during the 1970s to 1980s it has been doing great, and also since 2000 gold has been doing great. Now if we look at Bitcoin, we can also say that there's a strong correlation between expanding the supply and the growth of the valuation of Bitcoin. We can actually see that since the moment that there was supply increase, that Bitcoin has been rallying in price. During 2014 and 2018, there were periods of consolidation when it comes to the money supply, and those were also periods where Bitcoin suffered in terms of price action. So we could be saying that the bear market for Bitcoin wasn't influenced by anything related to the halving or the 4-year cycle, but it was pushed there by the politics or sanctions or rules that were created surrounding the supply in general. This cycle is kind of different, as we've seen that the ETF launch has been taking place, which broadens the amount of liquidity that can be going towards crypto. But overall, it is still copy-pasting the previous periods where liquidity has not or has been increased. So by knowing this, we also can time bull and bear markets for crypto and hard assets in general. The first question you need to ask yourself is, why is this important? Well, I mean, if we all analyze the fact that we've got the Bitcoin halving and are completely focused on that variable, at some point we'll be wrong. So you need to be open for different techniques of valuing an asset. And I think that doing that by focusing on liquidity and actual data that helps there is a better way of navigating through the cycles. So in that aspect, we want to look at a case of understanding liquidity additions or not. And if we look at the charts that we have on screen here, then we can also copy paste the bear and bull markets of Bitcoin, as I just discussed. What we see here, it's a website which is called Macro Micro, where you can see the major central bank M2 money supply. We just discussed that. And the important part is you need to remember why Bitcoin has been consolidating in some sort of side action. What we can see here is that since January 2014 all the way towards October 2015, the money supply was pretty much stagnant, which means that there was basically no additional liquidity being added to the world. Quite frankly, this was also the period where Bitcoin stagnated in terms of price action, and after that we saw a quick expansion leading to a case where Bitcoin did extremely well. Now, if you look at the period since January 2018, it was also the period where Bitcoin peaked at 20k and dropped towards 3k in the year of 2018. But we can also see that the liquidity was going sideways until October 2019, when it started to break out and when the bull market started to happen. So in that period we had a bear market. In the current period we can see that this expansion took place until, yes, correctly, January 2022, December 2021. We know that the Bitcoin peak happened in November 2021, and since then we've had a rough period, and you can see that in the liquidity until now we basically have seen no difference, zero, which means that we have been in a bear market since that moment. And if we look at the altcoin price action, we have been in a bear market since that moment. There hasn't been any bull. And if we compare that to the data points that we can see here, it's actually the longest bear market that we have witnessed. So the moment that the expansion starts to take place, that's going to be the trigger where Bitcoin starts to do well. That's going to be the trigger where altcoins start to do really well. Now, if we have this thesis, then we can also say that from this perspective, that liquidity is the one that's driving the markets. And based on the fact that we've just witnessed the longest bear market ever, we might also anticipate the longest bull market ever. And that a recession might actually be good for the markets, because recessions are periods of expansion for the money supply. They might be giving a shock at first, but overall they fuel the economy, and it's a period where central banks are pushed to increase the money supply to fight or combat a negative economy, or at least make it more, or stimulate the economy even more, which means that we've had those signs in the previous years or in the previous periods. Expansion took place, Bitcoin did really well. 2014, 2015 was a period of a slight recession. After that, we've seen that there was more monetary expansion taking place. So if we do know that, and we know the fact that currently the money supply is increasing, then we might be indicating that we're expecting and experiencing upwards momentum for hard assets like gold and Bitcoin. Then if we have that thesis, then we can also conclude that Bitcoin is acting as gold, and it's heavily correlated towards gold, as gold is a safe haven against monetary expansions or inflation. Bitcoin is an edge against big economic uncertainties, and there is a very likely case that in the coming years it's going to be one of the biggest bull cycles, as the expansion is just going to increase and increase. So is there a sign that we are having lower market expectations at this point? Yes, the labor markets are extremely weakening at this point. We can also see that the interest and overall trades are weakening at this point. So overall, the first signs of a recession are taking place. Then the final thing is that valuing Bitcoin against the US dollar doesn't make sense, because if you look at it from the current perspective, we've seen that we had a new all-time high pre-halving, and that was just generally due to additions of liquidity as institutions were able to buy Bitcoin. So it makes more sense to look at the valuation of Bitcoin against M2 to see whether the liquidity is being expanded, or you need to be looking at Bitcoin against the S&P, because S&P is relatively more safe, Bitcoin is a more riskier asset, and valuing it against the S&P shows you whether something is under or overvalued. In this case, Bitcoin is still heavily undervalued, because if you look at that chart, it's still down 35% from the all-time high. We can also see that gold against the S&P is just barely breaking out. So looking at gold at a new all-time high currently is not the right way of doing it. I think valuing it against the S&P makes more sense based on the fact that you know whether the S&P or gold is under or overvalued. And we've seen two previous occasions where gold was breaking out. The first one is 1971, and the second one is 2001. And this is going to be the third one. Both of them were periods of 10 years of upwards momentum, where in 1971 it was started by the Nixon shock. The Nixon shock was basically removing the gold standard from the US dollar, increasing the amount of liquidity that we were going to have. And in that period, gold did absolutely insane returns. The same for 2001, where gold was valued around $200 until 2011. It did a 6x in terms of assets. So if you expect the same to happen, then you want to be positioned into hard assets like gold, silver, and Bitcoin, especially if you expect a big recession to happen. I would classify the current market for Bitcoin as the perfect storm to happen. We've got the Fed, we've got the global liquidity, we've got a recession, we've got extreme right and left wing people against each other, social unrest, no trust in financial institutions, and we've got Bitcoin. And I think that Bitcoin as a valuation at this point is super undervalued. And if we look at that and we look at the current landscape, we've had high inflation. We are going to be having lower inflation, but it will be picking up at some point again. We've got rate cuts. going to happen. The Fed is eager to stimulate the economy because the labor markets are weakening. And we've got people that are investing into assets as they don't want to hold dollars in their pockets anymore because the dollar is losing value over time. And people have been hearing about high inflation for ages. So they want to invest into something because investing into the stock market and real estate markets has been the best strategy, as it has been going up only for like years, creating the biggest bubble ever. So that all combined is the perfect storm for Bitcoin to do well. And it's a combination of factors that is very remarkably comparable to the period of 1926, 1927, where we've witnessed 1929 is the big crash, and then 10 years of depression taking place after that, where as a sort of search for safe haven behavior, people were going into gold rather than having their own money into a bank. And that is comparable to what I expect to see happening with Bitcoin. I think that Bitcoin is going to serve the role of gold of the 1930s. Then additionally, we also know that in 2021, we've had a Bitcoin run that went to $69,000. Sam from FTX pushed us down. We see that in the liquidity that during that period, we still had expansions taking place where likely Bitcoin was going to go way higher than $69,000. But Sam was losing money, so he kept on shorting the markets in trying to keep his company afloat. So we've got multiple ingredients. We've got the recession coming, which means monetary expansion and more liquidity in the markets, where China is actually leading that behavior as China is completely toasted. We see another addition, which is liquidity opening up for institutional investors that want to get into Bitcoin through the ETFs, which has opened their doors towards institutions. We are going to be having a period of massive changes in the world with UBI, limiting our freedom, and way more, where we are just being checked all over on everything that we do, online, offline, through which I suspect that we are getting into the biggest bull cycle ever, and that from September and October onwards, likely we are going to be running to 90 to 100k at the end of this year, but likely we're going to be running to anything between 300 to 600k in this bull cycle, given the factors that we know. And I think that the next peak of Bitcoin will be the start of the next depression. Thank you for watching to this first edition of an educational video. It's not perfect, but we're going to get there. We've got 3 new chapters: education, portfolio, and altcoins. Let me know in the comments beneath which one you like. Next week we're going to be continuing with this series, making more content for you on your journey towards financial freedom. Have a good day, subscribe to this YouTube channel, and I'll see you again. Ciao.